Hello, my friends. Today is January 31st, and this is Markets Weekly. So this past week was a historic week. Not only did we get a new Fed chair nominee, we also had a historic implosion in the precious metals, especially silver, down 30% in one day. So I think these two are linked, but just by a little bit. So today, let's talk about two things. First off, let's talk about who future Chair Warsh is. And secondly, let's talk about the precious metals. Starting with Kevin Warsh. So over the past few months, it's been a roller coaster when it comes to the Fed chair race. Now, for most part, Kevin Hassett was in the lead, and he was also who I thought would be Fed chair. Now, Kevin Hassett was someone who had been with the president for a decade. He was the president's economist, chair of economic advisors during the president's first term, and right now he is president of NIC, another high-level policy-making role. He's been the president's loyal economist for a long time, so it stood to reason that he would be the president's Fed chair nominee. He was someone the president could trust to try to cut rates as much as possible. But a couple weeks ago, the president went out of his way at a press conference to make the comment that it's probably not going to be Hassett. Now, in retrospect, it seems like the kerfuffle with the criminal allegations against the Fed may have made some Republican senators less willing to confirm nominees that are perceived to be too loyal to the president, so that might have hurt him. So after Kevin Hassett was out of the picture, the race came down to either Rick Rieder, CIO at BlackRock, or Kevin Warsh, who was formerly a governor at the Fed during the great financial crises and almost nominated by the president to be Fed chair during his first term. Now, I've written about both of these guys, and to me, it was kind of a neck-to-neck race. I wasn't really sure what would happen. Now, Rick Rieder, I thought, was someone who was actually very smart, very thoughtful, had, I think, a good understanding of how the financial system worked today. But against him was that he previously had donated to Democrats and doesn't have really much of a relationship with the president, and also even donated to Nikki Haley, Republican Nikki Haley in the past, who also just not friends with the president. So I think it was going to be difficult for the president to entrust such an important job to this person who had such, kind of no clear ties to him, even though maybe he's, from a policy standpoint, maybe on the same page. Now, Kevin Warsh has always been someone who I thought was bizarre that the president would like him, and I think many people feel this way as well. The reason being that Kevin Warsh has been a hawk his entire career. He has been governor in the past, and we can look from his previous statements, declassified meeting transcripts, and also he's been in public life, just in podcasts and lectures and op-eds and so forth for a long time. And it's really, really clear who he is. He is a ginormous hawk, always talking about the Fed's balance sheet too big and, thinking that this would cause inflation and whatnot. Now, Anna Wong from Bloomberg Economics had a really good chart overlaying the unemployment rate, inflation rate, and some of comments from Kevin Warsh during the great financial crises. Now, heading in to the GFC, Kevin Warsh was like, financial system totally okay, guys. But by the way, I'm worried about inflation. And, in retrospect, obviously the financial system was not totally okay. But, everyone made that mistake, right? Ben Bernanke made that mistake. And I think Ben Bernanke did a really good job as Fed chair, right? Totally great crisis fighter. So after the great financial crisis, unemployment rate close to 10%. We were in the beginning of the Great Recession. Kevin Warsh, smart guy. Obviously, he updated his priors, right? He learned, right? So, actually, no. Even with the unemployment rate at multi-decade highs, Kevin Warsh was like, I'm kind of concerned about inflation. So that was a call that was wrong, right? It seems like his primary driver of his constant concern over inflation over the past decade was that the Fed's balance sheet. And that was also a totally reasonable stance, right? There were some people who had a monetarist view of the world saying that, hey, Fed expanding its balance sheet, printing a lot of money, increasing money supply, we're going to have a lot of inflation, right? And at that time, gold prices were surging. There was legitimate concern from many smart people. Okay. But after a decade of this, now we can see that that's actually not how the world works. Did Kevin update his mental model? No, he's still saying the exact same thing. So he's someone who's consistently hawkish and someone who also is not able to update mental models. So that's kind of concerning, but for whatever reason, President likes him. I think over the past few months, he's also moderated his stance. He's been talking about, we got a productivity miracle, so we're going to be able to cut rates and so forth, right? Saying the right things. But I think it's also very important to note that his father-in-law is Mr. Lauder of Estee Lauder fame, billionaire, and also someone who has been a big political donor to the president, to the Republican Party for a long time. And also, Warsh is extremely well connected. He knows a lot of influential people. And these influential people over the past few months all came to bat for him. So there's a very, very wide campaign behind the scenes where he had all these important people that you would know, you would recognize, come and just put in a good word for Kevin Walsh. In contrast, Kevin Hassett did not have the same network. Also, perceived to be difficult to confirm. Rick Reader didn't seem to campaign as hard. So Kevin Walsh definitely ran a very good campaign about this. And upon his nomination, you can see on Twitter, you had all these people congratulating him, right? So you got Mohammed Al-Arian, you got Jason Furman, you got even Mark Carney, Prime Minister of Canada. All of these people pouring out and congratulating Kevin Walsh, great guy. These are all people in his network. He is super well connected, and all these people pulled for him, and that seemed to have pushed him across the finish line. So what does a Chair Warsh Fed mean? So first and foremost, he's finally going to be able to complete his dream of shrinking the Fed's balance sheet. Now, there's a lot of people saying that this will never happen. This is ridiculous. Trump loves the stock market and so forth. So I think those people are going to be wrong. The reason I think they're wrong is that a smaller Fed balance sheet is actually a consensus position in the Trump administration. Secretary Bessent believes in this. Governor Bowman believes in this. Governor Myron believes in this. This is something they want to do. And this is something they can do. This is, I don't think this is not interest rate policy. It's not a Fed independence issue. So I think they have enough heft to do this. Question is why they want to, I don't know. Now, the process of doing this, it requires a lot of groundwork because it's going to be a fundamental transformation in how policy is implemented. So you're going to have a lot of banking deregulation, which they're on track to doing. And you're going to have probably some volatility in the markets unless you do it very, very slowly. Now, this is, in my view, probably going to be risk negative, depending on how smooth, depending how the banking regulations go forth. So, the thing is, Kevin Walsh openly tells you that he thinks that the shrinking the balance sheet, it's going to be a tightening impact, and that's part of the reason why he thinks he can cut rates. So it's all out in the open. This is really what they want to do, and probably talk more about or read about this week about how I think this could happen and what the implications were. But overall, I think this is risk negative. Now, the market took a look at his nomination, surprised a bit. I guess this guy is like the hawkish person of all the president's candidates. And so you had an immediate reaction where you had the curve steepen a bit. So more rate cuts, but, the longer end sells off a bit, probably because of the balance sheet thing. And also you have the dollar knee-jerk strengthening. And that leads us to our second topic, the total implosion in the precious metals market. So listen, we've been talking about the precious metal, silver in particular, for the past few weeks. Now, silver, as I've noted over and over again, is the original meme coin. Retail speculators love silver, right? And silver, over the past few decades, you can see that periodically it just surges to the moon and then it implodes. Happened in the 1980s, happened in the 2010s. And I know this because I was in silver at that time and, making a lot of money. And then I remember distinctly one Sunday evening, a Globex opened and it just all came crashing down. And there was an attempt to recapture the highs 50 at that time, and then it just lost that, and then it just totally imploded. It was a painful experience. So looking at this extreme surge in silver, again, I instinctively knew that this is going to happen again. This is just how markets work. It's just a new generation understanding and learning about speculation. So earlier in the week, I posted this that, guys, I'm going to go and sell some physical silver. I was already out a lot of my paper silver and looking at prices surge. I think at that day was like 110, 150. And I was like, this is totally ridiculous. And then I was looking at the silver bars that I had. Why am I holding this? If you really think about it, I mean, what am I using this stuff for? Honestly, it's on the ground in front of some wires so that my robot vacuum will not be chomping on the wires. Sometimes I use silver bars to hammer something. I've watched some convincing footage that says it's very effective against werewolves, but other than that, this stuff is just a huge rock, right? It's so what am I doing with this? In some weird bizarre scenario where we actually have a Mad Max world, this is totally not useful. What would be useful with something like a technology, for example, right? If we live in a Mad Max world, you're not going to have any more computers or cell phones, and this stuff is really really difficult to make. It takes hundreds of vendors, a lot of engineers. It's basically the pinnacle of our technological civilization. And if in the Mad Max world, you won't be able to make these tech stuff anymore. So you would have these useful things, not this rock. And even if you were, thinking about having a store of value, silver is not actually that good for that because it's too heavy. And if a 100-ounce bar, it's like 10 grand, but it's heavy. You can't really move it around. Gold, for example, would be much, much better for that. So I went and took my silver bar to the local dealer, and he offered me, actually notably below spot. Nice, like 15, 20 below spot, but I took it anyway. And then I posted, and I came back and I saw how viral my post had gone. I saw the comments, and I'm like, holy shit, I'm not bearish enough. All these low information investors just kind of clamoring in. And so the next day I went to try to sell another bar. And to my surprise, the dealer actually told me that he's not buying. He was not buying. Too many people selling. The foundry that he sells to also can't pay him for like 2 months. His vault is full, so he's not. So I have to actually go to a couple other dealers to try to find people to offload my bars. And I'll also note that when I was lining up in line to try to sell silver, there's a long line of people selling. And basically all boomers with their, who've been stacking for some time, it seems. In the window to buy silver, only one person, a Zoomer. Zoomer. So I was like, yeah, this is just part of learning, I guess. So in the internet, I noticed that people are saying, guys, it's not the top. It's not the top. You know why? It's because at the top, everyone is clamoring to buy. Everyone's trying to sell. So obviously it's not the top. I thought about that for a little bit, but then guys, if I want to sell silver and I can't even sell, that can't be risk positive, right? And all sorts of other misinformation like that. For example, there are some people saying that I'm actually being able to, my dealer is buying silver above spot. That's just so stupid, guys. That's totally not how a dealer works. A dealer works, same thing as a dealer in the treasuries market, for example. Let's say that spot is 100. He's going to buy below spot and sell above spot. He makes that spread. That's how he makes his money. Buying low, selling high. Bid ask, bid offer, and so forth, right? That's how dealers work. So to me, this is just totally, totally insane. And I remember all these people coming out and, don't you get it? Fiat is going to zero. Don't you get it? The Chinese are buying. Don't you get it? Right? This stuff, the banks are short. We're going to blow them up and so forth. No. What these guys don't get, though, is that back in the 2010s, people said the exact same thing. I'm not even joking. They said the exact same thing as everyone was buying it to 50. They said it on the way to 50, and they said it on the way down to 15. What's even more surprising is that when I look back to the 1980s, looking into when the Hunt brothers were trying to squeeze silver, same thing actually. Inflation is high, deficits are large. Guys, this is, basically your debasement trade. And they said that all the way up to 50 and all the way down to $7. So this stuff, guys, it just happens over and over again. All this is speculation, momentum, leverage, so forth, highly, highly unstable. And so when you have a very, very unstable thing, you just need a little push to tip over the apple cart. And that's what Kevin Warsh did. Hawk comes in, dollar strengthens, not hugely, but, markedly. But then that seems to unravel everything. You got, when volatility picks up, somebody sells, he's over levered, other people have to sell, and then you have these people who are, manage according to volatility spikes, they have to sell. You got CTAs looking at momentum, they have to sell, everyone sells, And then it becomes really, really disorderly, which is exactly what happened. Down 30% a day. That is one for the history books. It's really, really shocking to me how badly this played out, but also how much leverage there was in their system. Now, as an aside, though, I would also note that having silver, some people were saying like hundreds of dollars. That's never going to happen. It's not going to happen because silver is different from this other crap people speculate in, right? Silver is actually an industrial metal. Stuff like meme coins, dog coins, stuff like that. You can go and push that as high as you want. Nobody cares. But silver is something that has to do with industrial policy, national security, stuff like that. So the government is not going to let these speculators squeeze it to really high because it actually impacts a lot of important interest groups. And so in the 1980s, you have all these people who basically gotten together and to rig the game so that silver imploded. Huge margin hikes, of course, also only letting people sell, not buy, and so forth. So, I mean, if you want to push something higher, gold, in my view, is something that could go higher. These industrial models, you're fighting political economy. But gold, of course, also huge dip, 10% down. Now, I'm not as negative about gold. I think gold actually, I think we could still have higher highs this year. It seems like there's a lot of things going on. Similar dynamics, again, not as levered, and also a much stronger demand base. You actually have, for example, central banks or other people who are a little bit more conservative in their views buying gold. Now, you will not have central banks buy silver. That's just not what they buy. So I think that my best guess for silver is that we kind of try to push up, maybe, try to touch 100 or something like that, probably fails, and then it'd be the end. Until, again, looking at the silver graph, a few decades. Gold, though, I'm much more positive on, not as worried about that. So one thing to note is that that's really, really in gold's favor is that we do have real geopolitical risk heating up right now. So a carrier has entered the Middle East last week, and it does seem like they're going to try to do something over there. And so that's going to be now this is probably not going to be Venezuela. Again, the president has been very calculated in his use of military force. By the way, this is not at all MAGA, but he, these calculations are difficult to make. You have huge amounts of uncertainty in geopolitics. A lot of things that are difficult to predict, and we don't know that we don't know. So it could be very, very bad, and that could help gold. Well, in any case, totally historic week. All right, I'll talk to you guys next week.